There are two very powerful institutional swing points that you can use for trade entry if you are trading the ICT concept, and in this video I want to show you how to identify them. I think personally this is one of my favorite way to trade using the smart money concept. So let me show you how to identify them and how you can literally use them for trade entry if you're trading the smart money concept. So usually let me start by showing you a sketch of how this pattern forms before I can go to the chart and show you how to literally spot them to use them for trade entry. So the first one is the one known as the liquidity sweep pattern. This is something like this, okay, where you have something like this and all of a sudden you have a sweep of liquidity above this recent high that was formed. This entire movement that pushed price to this level was just trying to peak liquidity above this area. Okay, so all the liquidity that is above this recent high was peaked, and then this swing low now retraces back to this level, and then you have an entry around this area. This is literally like a breaker block. I'm going to show you how to use this, how to spot it. So whenever you see this happens, you know that the institutions are literally in this because they reached out for liquidity above this place, because liquidity normally resides above an old high or an old low. This was an old high, and we expect to see that liquidity resides above here. So all this place is full of liquidity. So what we are literally saying is that above this old high there is a liquidity pool above this old high. All this place is filled with liquidity. Liquidity is simply money, and in this regard it is in form of buy stops. Okay, so this place is full of liquidity, so the institutions reached out for this liquidity before pushing price down, leaving the people that last bought from this area, leaving the people that sold from here and their stop losses here out of the market. They pick all their stop losses in form of money, because liquidity is literally money, before they pushed down to this level. So in this kind of regard, as a retail trader, this is where the institutions really pick their orders. But you as a retail trader, you will wait for this price to come back to what is known as a breaker block. Okay, I'm going to show you that on a chart. Literally, this is the first pattern of this kind of institutional swing points, where you can see the footprints of the institutions and you literally know that they are in this particular move. So when you see this price come back to this level, this is almost impossible for you to fail in this kind of entry. You wait for it to actually come back to here, and then you're going to find an entry at this point. So this is how to spot this kind of institutional swing points. The first one is the breaker pattern, okay, where you have a total soup and there is a grab of liquidity above the recent high or in a form of a recent low. It can be in two ways. Okay, let me show you the other one. Let me show you. It can be in two ways. Either you find it in a bullish way or in a bearish way. You can find it in this manner. Let me delete everything and show you that quickly. You're going to see it like this when you have a low that was formed and then you have a liquidity sweep and you suddenly see price displaced from this area. So this place, the entire movement, there was a liquidity that was peaked below these levels, because this is where all the stop losses are. This is in form of money. Liquidity is actually money, as I told you every time. Just replace the word liquidity with money. So in this place there is a lot of money, so this is where liquidity is residing, and then the institutions reached out for this liquidity before they push price up. So they leave all the people that have sold at this area, and then their stop losses are here out of the market. They just remove them and then they are up running again. So you as a retail trader that knows how to trade the smart money concept, you will patiently expect price to come back to where you have this area. Okay, this is in a form of a breaker block. Okay, we call it a breaker block. I'm going to show you how to identify that when I go to the chart, and then from here you can take the entry. So this is the first pattern I told you. It can be bullish, it can be bearish. And then the second part of the institutional swing points is the failure swing. You're going to see it like this. If a price is coming like this and then you have a retracement, this is a high that was formed. Let's mark it out. The high was formed here, and what do you see from here? People that are selling from this area, their stop losses is literally here. Okay, their stop losses is here. Let me show you how that is. So this is how the institutions do their manipulation. Sometimes because your stop losses are here, they never really allow you to go back to this area. Okay, and then they allow price to just have a failure swing before pushing down. So in this kind of pattern, this is the second way that you will find these institutions are taking their swing. From this area, you will see them push price downward. So from here, as a retail trader that has an understanding of how the smart money concept works, you will wait for price to come back to where you have your mitigation block, this place. I'm going to show you that on a chart. Don't worry, at this point is your entry, and you will find an entry here. We will see how these things form. It is a very powerful pattern for trading with the smart money concept. Please don't ignore this, just watch everything. And then we also have the bullish pattern, just like that. You have this, you have a failure swing, you have price pushed above, and then it came back to this entry at this point, and then you see price going up. So these are the two institutional swing points. This is a very powerful way to take trade, especially the first one. Let's go to our chart and then we're going to spot all of them. So look at what I'm saying right here. Look at something that happened here. This is an institutional swing point. Look at it. We have this pattern. Look at what I'm saying. You see price came from here. Let me enlarge this a bit so you're going to see what I'm saying. This happens very powerfully. And you can see price came to this area. We have a push to this area. Then you have another one. It took out these stop losses here. That is the liquidity. Let me just expand it a bit. If you're seeing what I'm doing right here, this is it. I just expanded it. Look at it. Price will now push up to this area. Can you see it forming that exact pattern we are saying? It actually picked the liquidity, all the liquidity below this area. So this is how you're going to see the institutions do this. Once you see them do this, this is how to get the entry point. The last bullish candle that printed in this regard, this is the last bullish candle. I hope you are seeing this clearly. This is what you will mark out. Okay, you will mark out this last bullish candle, and that is where your entry will be at this point. This is where your entry will be. So once you find this entry, you're going to have this trade go in your direction. So this is how you're going to spot the institutional swing points, and then you're going to take trade with them. This is the first pattern that I'm showing you. You can see a lot of them. Literally, this is not a guesswork. It is literally what happens every time and time if you're trading the smart money concept. There are moments that you may not see this clearly defined and you may not be able to take trade with that. Look at this. This is exactly that. You can see this. We have this push to this area. Now you have to understand that even if it is just the wick that just pushed above the recent high, you can consider that as a breaker, or you can call it a total soup or liquidity grab. So when it comes back to this area, we're going to see this. Can you see this formation that reached out to this level? And then you're going to see it come back. Now in this regard, you're going to see this as the last bearish candle. Just look out for the last bearish candle. Let me just enlarge it a bit. The last bearish candle, this is where you're going to mark out your entry from. The last bearish candle at this point, this is where your entry is, and then you will enter your trade at this point. Your stop loss will be above this place. This is where your stop loss will be. In this one, your stop loss is going to be below here. So just look out for this. I'm going to show you a lot of that, and then you're going to try it on your chart whenever you see it. There are many ways to trade the smart money concept. I'm just giving you the few ones that you can use for now. I'm going to teach you a lot of things about the smart money concept that can really bless you and make you start your trading career properly. Look at this. Let me show you this entire movement. You can see this. We had this, and then we have another movement here. This is a formation of that, breaker pattern, and then we have another one. Sorry, I'm using MT4. That's why this entire movement, you can consider it as a breaker block. Okay, so this one, you can see price actually came and respected this last bullish candle. Okay, this last bullish candle, rather, you're going to mark this last bullish candle. This is the area you should expect to take trade as price come back to this area. This is an entry. You can enter from there. Your stop loss is here below this level. So you're going to see this. Let me show you how to spot that other one, but let me show you this last one that just happened here. Price came to this level all the way to that place, have a retracement back. Institutional swing points is the name of this. Okay, now if you adjust this a bit, okay, let me just adjust it a bit to this area. You're going to see that then price came crashing. Why do we have this push up? Because there was liquidity residing above this area. Let me just adjust this line. You're going to see liquidity above this area. So all this place is liquidity from this point. So where do you expect price to come back to? Let me remove these things and then I'm going to show you. price is expected to come back to the last bearish candle in this regard, because we have it as our breaker block, this last bearish candle. If it is on the downside, you're going to consider the last bullish candle, just like this one. Let me show you that. I hope I'm able to show you. Okay, this last bullish candle, and then this one, it is the last bearish candle that you will consider. So let me show you the failure swing pattern. You're going to see them a lot of the time if you're trading. I'm seeing a lot of the breaker because that is one of my favorite and it is one of the best. You see, then you see a sudden coming back to this area. You see a sudden push and grab of liquidity above this level. Liquidity was grabbed here and it came crashing to this point. Now look at what you should map. The last bearish candle at this point is what you should be mapping, and this is your entry. Boom, your stop loss is here. So let's find that. I hope I'm able to see that literally on this chart. Okay, so to also check the failure swing, institutional swing points, I just checked this particular pair. Look at what I'm seeing right here. The same pattern we were expecting. We can see this. Let me just adjust this a bit so you can see how these things work. So these things are always on our charts. It's just that we need to pay attention to it before we can literally see them. It came back to this level, price push, but it never reached this low. Can you see? It never reached the recent low that was created, and then all of a sudden from there, price actually pushed above it. This was the exact pattern we were seeing that time around, and it came back. It came back to test the last bullish candle that was printed, this one, before pushing up again. The difference between the failure swing and the breaker is that the failure swing never reached the low or the high, but the breaker always reached back to peak liquidity. So the breaker is mostly the most powerful to me because the liquidity has been picked already. This was a breaker too. It pushed, created a breaker, and came back to test the last bearish candle in this regard before pushing down again. So this is how we're going to see them literally on our chart time and time again. Look at this here. You can see this movement, this entire movement is not going to be as smooth as the one I drew on that first chart, but you're going to see the same pattern forming. So what you're going to do now is to just map out the last bearish candle, and this is it, and this is your entry. Okay, this is your entry, guys. As it comes back to that level, that is your entry. Look at another one right here. We have this, something like this. We have push again. We have this one came back to this area. We have it push again, and then it came back. Look at this time around, the bullish candle that was printed. So we have a push up. So you're going to see this time and time and time again. This is also a failure swing. This one, a failure swing, was here. So these are the institutional swing points that you're going to take notice of as you're trading the ICT concept. Look at another one right here. Price came, then it had a push again. This is a breaker because we took the last low that was created, then it pushed up. Price came back. Look at this small retracement. It came back to the last bullish candle that was printed, and price shoot to the south. Okay, so this is actually how to use this strategy, guys. I hope this is helpful. If you have any question, let me know in the comments, and make sure you subscribe for more of such kind of tutorials. Thank you guys for watching. See you next time.